FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You are listening to and perhaps even watching the Financial Survival Network. I'm Kerry, Lutz, and well, today, when you'll be watching this, will be 9/9/2020. And our good friend, Craig Hemke, is with us. And Craig, you scored another knockout forecast because you said right after Labor Day, I have a feeling the price of gold and with it silver is going up. We had an upside reversal today. It's Tuesday. It's day right after the holiday. The upside reversal, we were down $15, $17. Now we're up nearly $12 the ounce. How do you explain this uncanny talent of yours?
I'm actually part witch. Warlock, I think, is what it is, Kerry. Mm-hmm. So don't piss me off because I'll cook up a stew, with my other fellow witches, and who knows what we'll do. But no, I don't want to make it sound like, geez, I mean, I've been doing this long enough that I'm not going to run around waving a flag today and say, see, I told you so, because everything can turn around and make you look pretty foolish, even intraday. But the notion that we get better after Labor Day was based upon what we've watched the last 3 or 4 weeks. And as we're in the summer doldrums, right, August, a vacation time for U.S. traders, but even more importantly, maybe European and Asian traders, everybody heading out to the south of France, maybe West Palm Beach, all these fancy places. And then leaving just kind of the algos and the bankers to do their thing. And we watch, really, it was very frustrating the last couple of weeks to watch gold and the dollar trade almost tick for tick. Now, a lot of the generalists out there, when they're writing up an article and wanting to, they're looking for a quote, a magazine article or a newspaper article or whatever, they'll call up some generalist and they'll say, well, why is gold down today? And they'll say, well, the dollar was up. As if that's universally true, and it's not. The dollar can be a headwind or a tailwind for the intraday stuff. But if they were just exclusively inversely correlated, then you'd say, well, the dollar's at 93. When was the last time the dollar's at 93? Well, May of 2018. Oh, then gold must be 1,300 because that's what gold was, right? It doesn't work that way. But during the summer doldrums, in the dog days of summer, when the algos are in control, geez, we were seeing every single time there was an uptick in the dollar, gold would go down. I mean, it was aggravating. Well, what we were speculating the last time we spoke was that by the time we got past Labor Day, we'd get all hands on deck. Actual carbon-based traders would begin to look forward to the Fed next week and all the things that Powell has told us about inflation and what that's going to do to real interest rates, and that there'd be kind of maybe a move away from the dollar being a driver tick for tick. And suddenly today that's happened because the dollar is up 50 or 60 cents as measured by the dollar index. And for a while, gold and silver were down in the same old pattern, but hold on. We've gotten that big reversal as you're talking about, as actual people start to sense what's really important, and that's real interest rates. And I think that's what's now kicking in. So that's what that was all about. That's why I expected things to be better. And lo and behold, at least for now, they are.
Yeah, I think that's a great point that Wall Street's on vacation. The B team is there, and it's just kind of the caretakers and the algorithms running things. Surprisingly, though, last Friday, man, the market got totally slammed. Thursday and Friday. And I was wondering if there was going to be an emergency call, like get the helicopters, bring them back from the Hamptons, start chartering those jets because we got a problem here, Houston.
Yeah. Well, and again, obviously, the Fed is now got their fingers in every single pie, right? Bond market, corporate bond market, Forex, We know they can't allow the stock market to go down, right? Because that'd be massively deflationary. And Chairman Powell over the last couple months, and specifically again a couple weeks ago at his little Jackson Hole online speech, clearly is telling everyone that is willing to listen that the Fed will soon do everything in their power to spark, or they're currently doing everything they can in their power to spark inflation. Now, whether that means they got to directly intervene in the stock market or continue to directly intervene in the stock market, they will. They'll monetize everything that they can possibly monetize to get as much cash out there as they can. And the last component of it is they're going to institute yield curve control so that they can attempt to inflate away all this debt. All these things are happening, and then they're going to continue to happen. And that's why, again, I think you're seeing this turnaround today as, rational actors are looking around going, 1920 gold, that looks like a pretty good buy. So anyway.
So this could be the next point in the breakout. Not to mention, we're also, from a trading standpoint, entering the most dangerous time of the year, September and October. Your gut feel, are we going to see a major systemic event here in these 2 months? Or are they just going to keep priming the pump for the election and not worry about it for now?
That's guessing the stock market is just like, you could maybe do that stuff 20 years ago, but now it's with all these central banks doing their thing. It really becomes a fool's errand where you're almost like, you can't help but do the absolute wrong thing, And so with that said, I just can't believe the Fed can allow the stock market to go down. Now, maybe it'll go down despite, what they might want to do in the short term. But, the next thing that would happen if the stock market ever really got in trouble is the Fed would, I guess they can't right now buy stocks, but the Congress can always rush through a change in their charter too, and who knows, who says they have to tell anybody, so that would be the next thing. I mean, they're already buying everything else, right? Corporate bond ETFs, corporate bonds directly, all this kind of stuff. The Bank of Japan, the Swiss National Bank, they're all buying their own stocks. That'd be next. And, again, the old adage, Kerry, is you don't want to fight the Fed.
No.
And to that end, if the Fed's trying to spark inflation, they're not going to be able to get inflation out of a rising dollar. I mean, a rising dollar is almost by definition deflationary. So don't fight the Fed either. Dollar's going to continue to weaken too.
Hey, let's not forget, even though the Fed technically is not allowed to buy stocks, it's not in their charter, if you will.
Yeah.
I go back to 1987, the crash of 87, where literally the markets seized up and weren't opening. Most stocks wouldn't open. And the Fed went to the Kansas City Exchange, which then existed. I don't even know if it's around anymore, if it's been swallowed up. And they went and they started buying options on the Dow. Through the Kansas City Exchange. And by virtue of them buying options and jacking up the price of those stocks, the exchanges were actually able to open, and then the market started functioning.
So they will great history.
Right? They will do it.
Right.
If they need to. And that was documented by the Wall Street Journal. It's not supposition. It's not speculation. It was done, and they did it. So they'll do anything they have to. It's like I used to say about my wife, better to seek forgiveness than to ask permission, right?
That's right. That's right. You know how that's going to work. And at that same time, that's when they came up with the President's Working Group on Financial Markets, right? That's a real thing. People jokingly call it the plunge protection team, but it's a real thing. And here's your most recent example. After the Fed had tightened the money supply, and it way overshot, trying to make it seem like they were going to normalize everything in 2018. All of a sudden, they got the 10-year note up to 3%, and the stock market began to crash and was just absolutely crashing in a liquidity squeeze in December of 2018. Christmas Eve, Mnuchin gets together with Powell and everybody else, and they call together a meeting of the President's Working Group on Financial Markets on Christmas Eve. And said, okay, we got to fix this. Markets are closed on Christmas Day. And the day after, on the 26th of December 2018, Dow suddenly goes up 1,000 points and you got this V-shaped bottom. So, I mean, to your point, the Fed doesn't necessarily have to go in there and start buying Google and Apple and all that kind of stuff. They've got their minions that they can do that. All they got to do is they can get the banks to give them some collateral, some bonds that they're holding. They can give them back a bunch of cash. The banks themselves, their primary dealers, they're the ones that can go in and start buying all those options and futures and ESs and everything else. And suddenly things go back up. So there's all kinds of tools that they'll be happy to employ should the stock market go down, because they just can't afford it to go down. I mean, again, all the pension funds and the institutions, and now we've even got insurance companies, that own stocks and high yielding bonds and all this. They just got to keep all these plates spinning. So the notion that people put out there that somehow the stock market's going to crash, I suppose anything can happen, but man, they're sure going to do everything they can to keep that from happening.
I want to go back to ancient history, which in this case is exactly 1 year ago, almost to the day, when the repo market imploded. Yeah. All right. So that was the tip off. And we said it then. I remember talking to you and to many others, because to me, the repo market is like, they don't put the A or B team on the repo desk. It's C and D. Because all they do is, we need $1 billion. Okay, you got bonds? Yeah, here's the bonds.
Yeah.
All right, here's your $1 billion. Pay me back tomorrow.
Right.
And it's the most staid market. And we know from history, it only breaks when something really bad's about to happen. And so we knew in September something bad was going to happen. We knew the economy was going to go down. And then COVID conveniently comes along, which provides cover for everybody, Craig. Everybody. Trump gets to say, well, we had the greatest economy in the world, and then COVID, and they shut it down, and what could I do? Millions of people were going to die. He's got cover. The deep state's got cover. Everybody gets to cover their ass. COVID. But we knew this day was coming here. We knew where we were going back in September, right?
Yeah. Yeah. And Kerry, I'd state it this way. You go back to a year ago, this time was about the time that crazy, I forget her name. The lady here near where I live in Kansas City that is an economist that is the big proponent and champion of modern monetary theory. Oh, crap. No, I can't remember her name. I'm getting old.
You're talking about AOC.
No, not the Congress woman.
I know.
Anyway, what's her? Well, anyway, regardless, modern monetary theory became all of a sudden this topic, and they were gonna remember that. Then they came up with that idea again of printing a platinum coin and saying it's worth $1 trillion, and all this shit. And we're all laughing, going, "Oh, this is madness! You can't do this. You can't just buy out. Well, as long as the Fed owns all the debt, then we technically owe it to ourselves, and so it's okay." And everybody was like, "This is crazy." That was only a year ago.
I know.
And now because of COVID, it's exactly what they're doing, Kerry. The Fed has bought all of the net issuance this year of the treasuries. And if that had happened last year, people would have lost their minds. But now because of COVID, it's like, well, it's what they got to do. It's no big deal. Well, it is a big deal. And it's modern monetary theory in action. Just nobody is calling it that. And so was the crisis used to get us all, be the frog in the pot, and they turn up the heat, and now all of a sudden we don't even notice what they're doing? Yeah, maybe.
It's rather shocking.
Yeah.
It's shocking. Just the amount of money they're throwing around. And hey, let's go back a couple of years ago, the concept of helicopter money.
Right.
And I'm thinking, no, the Fed's just never, that'll be the end when they're just giving money out to Joe Sixpack.
Right. So okay, hold on. I gotta stop you there, because this is really important. And I don't want to forget to go back, and I'm glad you brought this up. At Powell's Jackson Hole speech, his virtual Jackson Hole speech, I just rereading it this morning for a post I'm writing for Sprott Money that'll be up later today or tomorrow. At his speech, there are two big, lengthy paragraph sections where he talked about, they're trying to spark inflation, and how once you get into a deflationary cycle, the thing kind of reinforces itself because people lose their inflationary expectations. And then when they lose in deflation, then that kind of becomes a self-fulfilling prophecy. And you get this deflation that gets going. And he references Japan without calling them out. And he says other central banks have caught themselves in a cycle and they've been unable to get out of it through conventional monetary policy. And those are the words he used, conventional monetary policy. And that they don't want that to happen in the US because that's an insidious cycle. They got to have inflation to combat all this deficit and debt. Okay, well, guess what? If you're unwilling or history has shown you that conventional policies don't work, well, what does that tell you they're going to try next, Kerry?
Unconventional.
Unconventional. And what's unconventional? Helicopter money.
Money, yeah. Well, really, PPP and all this.
Yeah, all that stuff.
Mm-hmm. Helicopters, it's just you had to be in a company to get it, more or less.
Right. What's this? I've read a couple of people have sent me the links a couple times about this bill in Congress that allow them to just basically give everybody a credit card or a debit card that the Fed can fund, and then you could just go out and spend it.
Yeah,
that'd be unconventional.
You can't make this stuff up.
No, but again, as a frog in a pot, man, if they dropped all this stuff on us a year ago, what? Now here a year later, you get a little virus going around killing 85-year-olds, and all of a sudden you got all this stuff happening, and everybody thinks it's just fine.
Yeah. Well, let's not belittle COVID. A lot of people.
Yeah, I know, but
I know what you're saying.
You know what I'm saying?
Black Death.
Right.
It's not the Black Death, and man.
Right.
I've never gotten as much hate mail over any topic, and I'm not minimizing the damage COVID has done. I'm merely stating the obvious, which is that, it's maybe twice as bad as the annual flu.
Right.
And we don't even know the numbers. Look, you and I follow numbers for a living, all right? That's our life's blood. And when I look at a chart, what I saw with COVID, the death chart, something wrong with it. I can just tell you, looking at it, there is something really wrong with it. And I don't want to go start on the dark side conspiracy theory, but I'm telling you that those numbers don't add up. But I'll take them as they are. All right. Even taking them as they are, it tells me effectively this thing was over in April.
Yeah.
Everybody woke up.
Yeah. And it's almost over now.
Yeah. So we had 28 deaths, 22 deaths in Florida. We had 282 deaths out of 330 million. So 330 million people went to bed, and almost that exact number woke up the next day. And the thing has been over.
Right.
For months.
And like you said, Kerry, nobody wants to minimize, I mentioned the line about 85-year-olds, but that's really this is impacted, is people over 80. And a lot of people that had pre-existing conditions and, were in their last days anyway. If you're willing to actually assess the numbers, even these current deaths that are being reported are a lot of times kind of deaths that occurred weeks ago that are now just being classified as COVID. The thing's almost over. Now it may surge back again like it did this summer on a smaller basis, but it's most likely mutating into a less transmissible form, just like the other SARS viruses have, which is wonderful, what a great blessing. But now, again, we're not going back. The $3-4 trillion deficit is here to stay. The economy is not bouncing back. Kerry, the jobs number last Friday tried to tell us that there were another 1.4 million jobs that came back. It's all garbage. I know we can't go on forever, but anybody can go back and look. When the Bureau of Labor Statistics computes this number, it's off surveys that they do in the middle of the month. So the August report comes from a survey from the middle of August, but most of it's just statistical guesswork. And one of the key things they use is what they call their birth-death model, which in August years past, has averaged, they go, well, we've averaged in years past in the month of August, about 155,000 net new businesses have opened in a growing economy. So they just assume in their calculations that that's how many opened this August as well. But we know that's completely bogus. And using that birth death adjustment, the BLS has added over 1 million new businesses May, June, July, August. Kerry.
That's great.
But with the economy shut down, there's no way we've had 1 million new businesses open.
Well,
that's ridiculous.
If they're doing, maybe they're virtual Uber drivers.
Yeah.
Nobody can call an Uber, but you could have a virtual one, I guess.
So what's going to happen now is we'll kind of start to recover economically, but it's not going to be some V-shaped recovery. And the Fed is going to have to continue what they're doing. And eventually it's going to lead to the inflation that they're trying to spark. But they're going to hold interest rates down at the same time. They've already told you that. And so inflation adjusted interest rates are going to continue to plunge. And that's what's going to continue to drive gold prices higher. And that's back to where we started. That's why we're rallying today instead of the dollar.
All right. I think we will leave it at that. If I didn't mention before, email us kl@kerrylutz.com with any questions, tfmetalsreport.com. Make sure you sign up, subscribe to the user forum. We'll more than make back your, well, it's less than half a cup of coffee a day.
Yeah, 50 cents a day.
Yeah, that's, well, out here in New York, that would be a quarter of a cup of coffee.
I'd give you a sip.
In Florida, you get half a cup. Probably where you are, it's about 3/4 of a cup. Either way, you just, for the info that you get, you can't do any better than that. Is the best value out there. And if you were measuring it in terms of gold, it's getting cheaper and cheaper in terms of gold, right?
That's true too.
All right. Well, hey, yeah, it used to be like 1/10 of an ounce. And before that, like 1/8 of an ounce.
Yeah.
And now it's less than 1/10 of an ounce.
That's right. That's right.
All right. So inflation adjusted. Anyways, write us kl@kerrylutz.com and go, by the way, we're having our half-ounce gold contest. You can win a half-ounce of gold if you guess the price of gold exact on September 25th at high noon. Just go to financialsurvivalnetwork.com/contest. Enter, one per family and no kiddies. Can't be paying off kids. And if you're outside the country, you might have to get it in the form of a PayPal transfer or other electronic transfer because it's impossible to send gold to many places in the world, but you can buy your own gold when you get the money. With that, we will leave you. Thanks again, Craig. We'll talk to you next week.
My pleasure, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.